Hey, Atia the Savvy Accountant here, and we're here for our day 2 of our series of how to maximize your deduction series to make sure that you are getting the benefit of your expenses so that you can reduce your taxable income. So today I want to talk about how to properly document your receipts, invoices, so that you don't fall under the IRS scrutiny and you are really compliant when it comes to your invoices. So the first thing I like to talk about is something that I share with my community often. It's what I call creating like a separate, like a electronic file cabinet. So a tip that I give for small business owners is to create a separate email address called receipts at your company. And what that is going to serve as your electronic filing cabinet. So every time you get an invoice or a receipt that you get as a paper copy, because they don't make receipts the way they used to. I can tell you right now, shoebox accounting is not. Back in the day, you used to be able to collect all of your receipts and take them to your tax preparer. Now they don't make receipts the way they used to. The ink is going to fade. So before the end of the year comes, those receipts are going to be blank pieces of paper. You're not going to know what those are for. So a tip is to scan or take a picture of that receipt. Write on the receipt what it's for. Like if you went out to eat with a client, write the date, who you went to eat with, so that you have that information on the receipt. Take a picture and email it to that email account that you created, invoices at mybusiness.com. So what that, and in the subject line, you're going to say what it is. So what that does, it's going to create a digital file cabinet of all your receipts, so you don't have to actually keep the paper copy. Because they don't make those receipts the way they used to. So you're going to have that now. And now you have all of those receipts. They're all going to be there. You're going to be able to look for them, search if you want to search meals with clients, if that's what you're putting in the subject line. But that's a tip so that you don't lose your receipts and you don't rely on those paper copies because they're not going to last. The second thing I want to talk about is mileage logs. So because you're a small business owner, you're most likely going to be driving your vehicle. So if you have a vehicle that's your personal use vehicle, you're able to use it for your business and get the benefit of having that vehicle for your business as a deduction. So what you need to make sure you do is need to make sure that you have a mileage log, or you can use a software such as like Mile IQ. That software is going to allow you to, every time you go for a drive in your vehicle, it's going to say, is this personal or business? You're going to do the swipe left, swipe right thing. And it's going to track all of your mileage, because in order for you to get use of using your personal vehicle in your business, you need to know the mileage that you've used for business compared to the mileage that you use in total, so that you can get that percentage to figure out how much did you use for business as opposed to personal. And so you want to make sure you have a log, or you're using that software that's going to be able to track your drives for you so that you can get the benefit of using your vehicle. So you want to make sure that you don't just think that you're going to rely on remembering where you went, because you are not. So getting a mileage log or using Mile IQ is going to help you keep track of your mileage of your personal vehicle. The third thing I want to talk about is commingling. This probably should have been the first thing, but commingling is something you want to stop doing now. It's not something you can fix in the past, but the minute you hear me tell you to stop commingling, stop commingling. What is commingling? It is you mixing the personal of yourself with the business that you have. And it's basically saying, oh, I'm going to pay for the business with my personal card. I'm going to pay for my personal lunch with the business card. And it's basically mixing the two so that an outsider looking in cannot see any distinction. And what that does is it basically tells the outside, that's people that could potentially want to sue you, oh, I don't see a separation between me and the business, so you don't have to see a separation between me and the business. And so, God forbid, if you are trying to sue me and you should have only been limited to the assets that are in my business, you now can come after all of my assets because I didn't separate myself from the business. So commingling is something that you want to definitely avoid. Make sure you have your separate accounts that are for the business and you use that for the business, and do not use your personal stuff for the business. So that's day 2 of how deductions are going to help you in your business. And I wanted to talk about how to safeguard and how to make sure you keep track of your invoices so that you don't lose them. If you have any questions, let me know. Bye.